right, everyone, buckle up because today we're diving headfirst into this insane market surge happening right now. It's November 7th, and our trusty AI-powered financial briefing is giving us the lowdown. You know we love to break down complex topics and make them easy to understand. So is this just a temporary high, or are we really on the cusp of a roaring 2020s?
Well, let's just say it's a good day to be a bull. But as always, the numbers only tell part of the story. We need to dig a little deeper.
Okay, so let's start with those eye-popping numbers then. The S&P 500 is up over 1%. It closed at a very respectable 5,929. The Dow Jones is throwing a party. It surged past 43,700 with a 2% increase. Even the tech-heavy Nasdaq is joining the fun, up over 1%, closing just shy of 19,000.
And let's not forget about the Russell 2000. It jumped nearly 4%. That tells us investors are really interested in small-cap stocks, those companies with the potential for some serious growth.
So what's the driving force behind this market frenzy? Well, our AI briefing is pointing to one major factor, the re-election of former President Trump. It seems like the roaring 2020s narrative is back and stronger than ever.
Yeah, it feels like Wall Street is popping champagne. Investors are clearly betting on Trump's policies to keep the economy going strong. You know, the usual suspects, tax cuts, deregulation. But this time, the optimism feels a little different. Remember the dot-com bubble back in the day? That was pure speculation. This rally seems to be grounded in more concrete things, like strong corporate earnings and a renewed focus on manufacturing here in the U.S.
Okay, I see what you mean.
Yeah.
But you always bring a healthy dose of skepticism to the table. So tell me, are we getting ahead of ourselves here?
Well, I'm cautiously optimistic. There are definitely some potential risks we need to think about.
Like what? Spill the beans.
Well, for one, Trump's policies, especially his stance on tariffs and his tendency to withdraw from international agreements. They could have some pretty big geopolitical consequences. For example, if he decides to slap tariffs on Chinese goods again, we could end up in a trade war, and that would disrupt global supply chains and send prices through the roof.
Oh, speaking of supply chains, I noticed that Hershey's stock took a hit because of those high cocoa prices. I guess no sweet taste of victory for them.
Exactly. That Hershey's news is a prime example of how fragile those supply chains are. We're hearing reports of disruptions in West Africa. That's a major cocoa-producing region. And that's driving up costs for companies like Hershey's. It's a good reminder that even in a bull market, not every company is going to be a winner.
And then there's the elephant in the room, a Republican-controlled government. Historically, the market seems to prefer gridlock. You know, that state of political paralysis where nothing much gets done. So what happens when one party controls everything?
That's the million-dollar question. We're not just talking about tax cuts and deregulation here. A Republican-controlled government could mean big changes in healthcare environmental regulations, even immigration. And those changes could have ripple effects throughout the entire economy.
So are we talking boom or bust? Well, economist Ed Yardeni seems to be firmly in the boom camp. He's predicting that this Trump-fueled rally could keep going strong all the way into the 2030s. That's a pretty bold prediction.
It is. And while I admire his optimism, I think we need to be realistic about the challenges ahead. Global economic growth is still pretty sluggish. And there are plenty of geopolitical wildcards out there that could derail this rally. Things could change quickly.
Okay, so we've got this market surge, but at the same time, there are some serious risks on the horizon. It's a bit of a tightrope walk, wouldn't you say?
Definitely. And one of the biggest unknowns is how these policy changes will impact things globally. Trump isn't afraid to shake things up, and that could have some pretty major implications for trade and international relations.
Yeah, he's already said he's not a fan of those big multilateral trade agreements.
Yeah.
And then there's the whole issue of tariffs.
Exactly. His America First approach could mean we see more protectionist policies, and that could trigger retaliation from other countries. Nobody wins in a trade war.
So what's the feeling in Europe? Are they nervous?
European markets are watching this very closely. I'd say there's a mix of cautious optimism and concern. They're hoping for the best, but also preparing for the worst.
And how about Asia? They must be on high alert, especially with those potential tariffs on Chinese goods.
Oh, absolutely. China, in particular, is watching this very carefully. They've got their own economic challenges to deal with. A trade war with the U.S. would just make things worse. Remember, the U.S. and China are pretty intertwined economically. Any disruption in that relationship would have global consequences.
It's like a tangled web with all these different factors at play. Seems like we're in for a bumpy ride no matter what. At least chocolate is still a safe bet, right?
Well, about that, remember that Hershey's news we talked about? It's a good example of how global economics can hit close to home.
Yeah, who knew a chocolate bar could be so connected to all of this?
It really is all connected. Those rising cocoa prices are part of a bigger picture of inflation that's happening globally. And if we see a trade war or other disruptions to that global supply chain, those pressures are only going to get worse.
Okay, so let's recap. We've got geopolitical uncertainty, potential trade wars, inflation lurking in the shadows, and now we're adding a Republican-controlled government to the mix. It's a lot to keep track of.
It is, but that's why we're here. We want to help you make sense of it all. Whether you're a seasoned investor or just starting out, we want you to be able to cut through the noise and make smart decisions.
Exactly. We're all about empowering you with knowledge, because knowledge is power. And when it comes to navigating these turbulent financial waters, you need all the power you can get.
Couldn't agree more. Now, speaking of knowledge, let's circle back to that bold prediction from Ed Yardeni. You know, the one where he says this Trump-fueled market boom could last into the 2030s?
Oh yeah, the roaring 2020s on steroids. It's an exciting thought, but is it realistic?
Well, I respect his optimism, but I think we need a dose of realism here. I mean, we've seen these kinds of booms before, and they don't always end well. Remember the dot-com bubble? The housing bubble?
Yeah, those didn't exactly have happy endings. So how likely is it that we're headed for another bubble that's about to burst?
It's tough to say for sure, but there are some warning signs. Valuations are already pretty high, and interest rates are starting to creep up. Plus, there are all those geopolitical risks we talked about. Any one of those could throw a wrench in the works.
So what's the average investor supposed to do? Should we all run for the hills? Maybe bury our money in the backyard?
Hold on, there's no need to panic. Remember, this is a marathon, not a sprint. The key is to stay informed, be prepared for some ups and downs, and make decisions that align with your own risk tolerance and your financial goals.
So basically, don't put all your eggs in one basket.
Exactly. Diversification is your friend. And don't be afraid to talk to a financial advisor. They can help you create a portfolio that's tailored to your specific needs.
Sounds like a solid plan. So today we've covered a lot of ground. Market optimism, geopolitical risks, inflation, a Republican-controlled government, and even a prediction that this boom could last for another decade.
It's a lot to process. But here's the takeaway. We're in a period of major change and uncertainty.
And that means both opportunities and risks.
Exactly. So it's more important than ever to stay informed, be vigilant, and don't be afraid to ask questions.
Okay, everyone, we're going to take a quick break. When we come back, we'll wrap things up and leave you with some final thoughts. Stay tuned. All right, we're back and ready to wrap up this wild ride through the market. We've thrown a lot of information your way, but now it's time for the most important part.
That's right. We want to bring it all back to you, the listener. What should you be thinking about after all this market analysis?
Yeah, we don't want to just leave you hanging. What are the key takeaways?
Well, the first thing is, where do you stand on this whole roaring 2020s idea? Is it all just hype, or is there really something fundamental changing in the economy?
Because if this is a long-term trend, that changes your whole approach to investing, right?
Absolutely.
Huh.
Short-term gains are one thing, but long-term growth requires a different mindset.
So how do you figure out if this is the real deal or just another bubble waiting to burst?
That's where your own research comes in. Don't just follow the crowd. Look at the underlying factors driving this growth. Are they sustainable?
Like we talked about, Trump's policies are a big part of this narrative. But are tax cuts and deregulation enough to fuel a boom that lasts a whole decade?
And what about those geopolitical risks we discussed? Could trade wars or international tensions throw everything off course?
And let's not forget about inflation. It's still out there and could easily eat away at any gains if it gets out of control.
These are all things you need to think about as you make your own investment decisions. There's no one-size-fits-all answer. What works for one person might be completely wrong for someone else.
That's why it's so important to understand your own risk tolerance. How much volatility can you handle? What are your financial goals?
Once you have a clear picture of those things, you can start to develop a strategy that makes sense for you.
And remember, it's okay to be cautious. You don't have to jump on every trend. Sometimes the smartest move is to just wait and see how things play out.
Exactly. Investing is a marathon, not a sprint. Slow and steady wins the race, right?
Okay, before we sign off, one last piece of advice. Don't let all this market optimism cloud your judgment. Stay informed, stay critical, and don't be afraid to ask questions. That's how you make smart decisions and protect your financial future.
Couldn't have said it better myself.
And on that note, we'll wrap up our deep dive for today. Thanks for joining us. And remember, knowledge is power.